name is Amin Reina. I'm an investment coach here at Sage Investors. Welcome to another edition of Stock Talk for the first trading day of 2016. Actually, originally was going to talk a little bit about an article I read on the weekend that linked up hip hop with investing. I thought that was kind of a cool thing, but given the events of today, where the markets all over the world, stock markets around the world, have been just pulling back royally, I thought it'd be a good time to maybe do a little bit of a quick mind map of what's been going on today and why things have happened as they have. Basically, it's really all driven today primarily by what's been going on in China. Overnight, or yesterday, I guess, the recent data came out with respect to their manufacturing activity, and the numbers weren't really surprising. Their PMI, their Purchasing Management Index, was down to 48.2 from previously 48.9 or something, and which anything below 50 is really reflected as a contrarian or a contraction in the overall manufacturing market in China. So this is nothing new that really came out of it. I think there's a general belief out there that overall the Chinese economy has been slowing down or is slowing down. But apparently it was a bit of an aha moment for a lot of investors, especially in China, as the overall stock market went down almost 7%, to the point where they actually had to put circuit breakers on and just cut off trading, which is not a great thing, obviously. But the question here is, what's the mind map? I was trying to mind map what are the impacts of these kind of pullbacks really with respect to the Chinese economy and the effect it can have, the contagious effect it can have globally. And the real major impact of a slowing Chinese economy is their demand for commodities has been and will continue to reduce, and that'll have an impact on other countries around the world that depend on exporting commodities to China, like Canada, US to a certain extent, Australia, some of the countries in South America, and so that's not good news for those type of economies. Another major impact really from a slowing Chinese economy is the prices for the goods that they would be exporting to other countries around the world would be falling. So in a way, they're exporting deflation, and the impact of lower prices for goods around the world is not a great thing either, because deflation is not a great thing in terms of profits. Profits would be subsequently falling. Chinese government, obviously seeing this, has been trying to take actions to slow or improve or stimulate the economy there, and they've pumped a lot of money into the system, into the banking system. But most notably, back in August, they tried to essentially begin a process of devaluing their currency, the yuan, and stock markets around the world, and the Chinese stock market specifically, had a hissy fit about it, and they didn't really like that. And slowly and surely, it seems like a lot of people think they're going to continue that policy of just slowly devaluing their currency, basically to make their exports more competitive and cheaper. But at the same time, if their exports are cheaper, then that's that deflationary exporting deflation argument, which can have become a vicious cycle for economies around the world. So ultimately, the real reason why their economy is slowing down is their dependency on exports, and the reason why they're exporting less is because demand for goods and services around the world is falling. And ultimately, if there's demand for goods and services is falling, that's not great for profits for companies all around the world, and ultimately that would be reflected in stock prices. So it seems like today has been kind of investors around the world have had a bit of an aha moment, realizing these dynamics that are in play after being so used to having basically artificially low interest rates that have kind of goosed paper asset returns. And so it seems like quite a few investors out there are just sort of said, oh, wait a minute, this paradigm is not sustainable, and they want to get out. And again, ironic, because this dynamic has been around for almost like a couple of years, and nobody's really noticed it. So that's right now, it seems to be that's what's the dynamic in play that basically fostered today's significant pullback in stocks in China and around the world. It's sort of an aha moment. And the thing about pullbacks is, there's really no. A lot of people say, why do stocks fall when we have these crashes and type thing? Well, there's a certain randomness about when stocks fall, especially precipitously as they've done today. There's a certain randomness element into it, and there's been a lot of empirical research that's shown that. And I've blogged, and if you check out my blog on Sage Investors, you would see I've written a couple articles talking about this sort of random effect of how asset bubbles kind of just pop. There's no significant event that occurs; it just happens. So that's kind of like sort of what I've been kind of mind mapping today about trying to figure out what's been going on today in with the market today. In terms of some action items that you're kind of looking at right now, it's on days like this. Days like this are kind of like opportunities where a lot of times you're going to see a lot of the baby essentially getting thrown out with the bathwater, and a lot of really well-run, really well-managed businesses are going to all of a sudden start going on sale and suddenly becoming a little bit more affordable. And this is the time where when I talk to clients, it's about always having that list of companies that you really always wanted to own, but couldn't own because they were either too expensive and too unaffordable. But it's days like this where these kind of companies, if you have that wish list of really well-run companies, when they fall back on days like this, are days where you just want to start clinically or methodically trying to start building positions. It's the classic buy low, sell high mentality. Granted, it's only one day, it's the first day of the year, so who knows, this could be a sign of things to come. But it's sort of days like this where I kind of get people that I work with, when I'm coaching people, to kind of start thinking about having that plan in place and having a list of companies and assets, types of stocks that they want to buy, having a list of those assets, that list available, and acting upon it. So that's pretty much all I had. All I want to talk about was sort of the events of today. It's interesting, it's the first day of the year, so is there more to come? Who knows? I have no idea what's going to happen tomorrow or the next day, but just thought I'd share some of my current thoughts in terms of what I'm seeing and how I'm kind of trying to process the events that are going on in the market. That's all I got. If you have any more interest in any more insights into what I do, you can follow me on my Twitter handle at Sage Investors. And if you want more information on my coaching services, investment coaching services, you can check out my website, www.sageinvestors.ca. My name is Amin Reina. I am the investment coach at Sage Investors, and this has been another edition of Stock Talk. And I look forward to speaking with you sometime in the future. Thanks.